Hey guys, and welcome to the Working Money channel. All right, we got a Bitcoin price prediction by CZ Binance, okay, the original founder of the Binance Exchange. CZ did predict a 2026 crypto super cycle. Will Bitcoin break out and hit a new all-time high above $126,000 per coin? Binance founder CZ predicts a crypto supercycle in 2026 at the Bitcoin MENA conference, suggesting Bitcoin could match gold's 60% yearly gains as hash ribbon indicator flashes a bullish signal. So CZ has come out. He says we might see a super cycle. That's a bold vision. Just 4 days earlier, the Binance Blockchain Week 2025, CZ did debate the Bitcoin value proposition opposite Peter Schiff, senior economist and founder of Euro Pacific Asset Management. So here's a clip. I wasn't going to play this clip. It is right here. Listen to this.
Don't quote me on this, but I think that force will be quite strong. So that force may be strong enough to offset the 4-year cycle. Who knows? Yeah.
So you're saying next year bull market?
We may be seeing a super cycle. Wow. So we'll see. Yeah. I'm not sure.
So he's not committing to it, but he's saying it's a possibility of a super cycle. During the discussion, CZ projected Bitcoin could experience a significant rally in 2026, and that we could see it outperform gold's performance, which is about 60% year to date. Moreover, the Bitcoin hash ribbon indicator has now flashed green, historically signaling favorable entry points for market participants. So that is the other thing, the MACD down here, you guys can see major support has been forming on the Bitcoin chart. However, there are a lot of naysayers saying, this is it, guys. We are actually formulating a bearish pennant pattern here on the chart. This indicates Bitcoin should go down even further, and that we are actually entering a bear year, 2026, looking to be bearish, not bullish. So, this is the big debate right now. In this morning's video, I talked a little bit about, Tom Lee's thesis and how that is now paralleling Raoul Pal's thesis. If you guys didn't catch that video, I will link it up here in the top right-hand corner. And we have CZ. He's not committing to this prediction, but he is saying there is a possibility we could, in fact, be entering this super cycle. We just have to wait and see. What we do know, though, legislation is solidifying, and this is getting developers like the EasyA guys really excited. Phil Kwok was just interviewed by NASDAQ TV. I guess it's NASDAQ TV. When you combine RLUSD with the XRP ledger, you get supercharged liquidity.
Together, when you combine the stable coins, together with blockchains, an RLUSD together with an XRP, I think that's where you get a supercharged amount of utility. And I think utility is the thing that everybody's talking about. How do we bring more of that? And that's when the institutions come in, that's when consumers can use it. And then this whole space is just going to grow, I think, bigger than any of us have ever imagined.
Yeah, and the network effect, as everyone is talking
Precisely.
about.
It's a network effect that's going to really bring utility to institutions, customers, and bring real growth eventually. The space will scale bigger than anyone has imagined. So if you guys want to watch the full clip here, it is, I do have a 19-minute video here with the guys talking on NASDAQ TV. I will link this in the description of the video if you're interested. Getting the word out down here, Dom saying it is supercharged. Phil saying you honed in on one of the absolute best clips. Great eye. This is where it really gets exciting. Supercharged. I love that term, and I can't wait to see more utility occur on the XRP ledger. Now, Bank XRP also posting this. SEC Chair Paul Atkins has underscored the value of distributed ledger technology. So this is coming in tandem, hand in hand with what the developers are seeing, like Dom and Phil Kwok. Well, the other side of this is opening up the field, letting these blockchain crypto companies be able to thrive in an environment where they won't be punished. Optimistic, positive words here from the new SEC chair, Paul Atkins. I guess he's not that new anymore, but the current SEC chair, Paul Atkins. So Senate's crypto market structure bill just turned into a mess, this courtesy of Jungle Inc. What looked like a near-finished bipartisan deal is now blowing up and the clock is almost out. So what's happening now, guys? Democrats just dropped a new counter-offer to Republicans with a long list of demands. And what those demands are: stronger financial stability protections, tighter market integrity rules, limits on stablecoin yield, tools to fight illicit finance, rules to stop platforms from faking decentralization, and ethics bans on public officials issuing or profiting from crypto projects aimed straight at the Trump world. So the problem with this, the White House is already rejecting the ethics provision and the demands for more Democratic nominees at the SEC/CFTC. And the Senate has only days left before the 2025 calendar year ends. If this slips into January, the bill gets sucked into midterm election politics, a possible government shutdown in early 26, and total legislative paralysis. So that would not be good. Jungle Inc. down here does comment, crypto regulation in America isn't stuck on policy, it is stuck on politics. This is not good, but it's the reality of the world we're living in. I hope we can get this sorted out. We are just hoping that we can see a market rebound here for cryptocurrencies, risk-on assets in general. Are we going to see a rebound? Is this going to go up? Is it going to go down? For more information, though, on where I think the market's going to go, you can follow me at patreon.com/workingmoneychannel. I've got my own ideas. I've got my own strategy. I know where I'm cashing out. I know where I'm going to be buying the dip. If you want to follow me, I'm opening it up, letting all my Patreon subscribers know what I'm doing personally. So follow me, patreon.com/workingmoneychannel. It is only $5 a month, but you got to subscribe and stay subscribed to lock into that price. $5 is not a lot, guys. Not for what you're getting at the Patreon. Check it out if you're interested. Another big announcement was just issued by none other than Elon Musk, guys. It has been launched internally. What he's referring to is X Money. So X Money has now been launched internally, this courtesy of Unknown DLT. In my opinion, I don't think it will be long before it is launched to the public. Once this happens, X will officially be the largest bank by customers in the world. So think of it, if you can use your X account to send money, to send cryptocurrencies. I've done videos on this in the past. There are some connections between Elon Musk, XRP, and XLM specifically. I'll see if I can find one. I'll link it up here in the top right-hand corner. Unknown DLT says, and my thesis is that they will most likely use XLM. Remember that Jed is a close friend of Elon, and Stripe, the current payment gateway used by X to process payments, has 2 billion of XLM. So an interesting connection there, but there's also a chance I'm wrong and they end up using XRP. The other thing is they could use a combination of tools, right? You don't have to rely on just one blockchain. Remember, this is going to be a payment platform for millions of users. Maybe they rely on both. Maybe they have a combination of two. Maybe depending on the jurisdiction you're in or where you're going to be sending money, they will use one versus the other. We don't know yet, and this is why I urge you guys to watch those videos. A lot of interesting information here, and that could come very, very soon. As Elon Musk has already said, it's launched internally. Now it's only a matter of time before it is released to the public. So wanted to thank Unknown DLT, Jungle Inc., Bank XRP, and Ash Crypto for posting those. Digital Asset Daily also posted this new announcement. State Street Investment Management, Galaxy Digital, and Ondo Finance announced plans to launch a private tokenized money market fund. So for those of you guys who might not know, Ondo Finance did partner with Ripple to bring its tokenized U.S. Treasury product, OUSG, to the XRP ledger, allowing institutional clients to seamlessly mint, redeem, and trade real-world assets, or RWAs, using Ripple's RLUSD stablecoin 24/7 instant settlement, leveraging the XRP ledger's institutional focus for faster, more efficient on-chain finance. So that is Ondo. Now, guys, they're serving as a planned anchor investor, unlocking greater 24/7 liquidity access while diversifying reserves. Ondo Finance, State Street Investment, and Galaxy Asset, an affiliate of Galaxy Digital, today announced a plan to launch Sweep. So that's their latest project here. A State Street Galaxy on-chain liquidity sweep fund, a tokenized liquidity fund designed to bring traditional cash management on-chain. How Sweep would work, okay? So it was introduced in 2023 as one of the first on-chain offerings, providing investors with seamless tokenized exposure to U.S. Treasuries. So leveraging the XRP ledger, right? Introduce instant 24/7 subscriptions and redemptions, expanded reserve diversification into products from lending asset managers, including BlackRock's Biddle, Fidelity's FDIT, and others, and delivered multi-chain availability and institutional-grade transparency. And they have a growing ecosystem, as you guys can see down here. Their instant 24/7 subscription and redemption, daily interest accruals, low fees, multi-chain support across Ethereum, Solana, Ripple, and Polygon. So they run the gamut there. And look at all this institutional money, the potential here for huge inflows into crypto. State Street Sweep, BlackRock's Biddle, Fidelity's FDIT, which I mentioned, Franklin Templeton's Benji Fund, and Wisdom Tree's WTGXX, on top of which Wellington Management's fund as well. So huge here, guys. This diversified foundation demonstrates how traditional and on-chain markets are converging and how Ondo is helping enable that interoperability. So the big takeaway here, traditional investors now merging with on-chain markets. And guys, we know they are a Ripple partner, so tokenizing RWAs, going over the XRP ledger, this is going to be big once we do see this kind of thing scale. So wanted to thank Digital Assets Daily for posting that. We also have some more news here from Felix Pren, guys, regarding the Japanese carry trade. And I wanted to extend this to XRP. Japan is the largest foreign holder of U.S. Treasury bonds at $1.2 trillion. For years, Japanese pension funds, insurance companies, and banks borrowed at 0% rates. Then they invested the money in the U.S. market at 4 to 5%. So this carry trade was essentially free money, borrowing for nothing, and then earning solid returns with minimal risk. They turned this into a $20 trillion global trade, with $1.2 trillion being U.S. Treasury bonds. But the game is changing. So guys, how is it going to change? In November of 25, Japan announced a $130 billion stimulus package, money the government planned to spend to boost the economy. Normally, this would be good news, but instead, Japan's interest rate spiked to 1.8%. This is the highest we've seen in 20 years. So you could see how this could have an impact on things. This is Felix Pren explaining this in more detail.
Japan is the single largest foreign holder of US debt. They own about 1.2 trillion, 1.189. How pedantic are we? 1.2 trillion in US debt. That's more than, the GDP of, say, Mexico or, Netherlands, depending on where you hail from. It's more than the market cap of Apple, right? It's big. And over the past 9 months, while other countries like China have been selling US debt, Japan has actually been increasing their holdings. Why? Because Japanese bonds pay basically nothing. So say imagine this, you're a Japanese pension fund or insurance company or something. At home, you get 0 returns. Well, you can go to the US and you get 4 or 5%. So what are you going to do? You're going to buy American debt, right? It's just like purely logic. But here's the problem. The math just broke. When Japanese bond yields were at 0, and the US, this is what it's been like for years. Japan, free money, right? So you can borrow in Japan and you can send the money to the US and you get 4.75%. Free money. So if you're a financial institution, you're going to borrow as much as you possibly can and you're going to send all that money and buy US government debt with it, because US government debt is 0 risk, right? So what could possibly go wrong? You're just going to make 4.75% on money that wasn't yours, it isn't costing you anything. This is like the greatest getting rich scheme ever, right? Monsieur Ponzi is turning in his grave thinking, I should have thought of that, right? But now, well, Japanese debt is already giving you 1.8% right now. 1.8%. Now, US interest rates have come down. You get about 4.2%. So the difference is shrinking. You might be thinking it's still a good business, it's still free money. Well, they hedge their currency, and that costs some money. And it's gotten more expensive. So this is no longer like the obvious 100% money-making guarantee Ponzi scheme that it's been for decades.
And guys, if investors find themselves in a snag with regards to this $20 trillion global trade, they might need some bailing out. XRP and the global financial reset, bridging Japan's reverse carry trade challenge. This courtesy of Derek Little. He did post this on LinkedIn, an article that I noticed was published about a week ago, but I thought I'd bring it up with regards to this topic. The traditional global financial architecture is undergoing a profound transformation. We're seeing this in Japan, of course. It's beginning to unravel decades of financial strategies, and new demand for efficient, high-speed, and liquid cross-border settlement systems is emerging. We also should make note that SBI and many other Japanese banks are committed to using XRP. I guess I should have prefaced by saying that it's been part of the Japanese banking fabric for many years now. At the heart of this nexus, of macroeconomics and decentralized finance sits XRP and the technology developed by Ripple, positioning themselves as a crucial bridge in this financial reset. So he is suggesting XRP going to be used for this financial reset. This article explores the deep connections between Japan, the looming threat of the reverse carry trade, and how Ripple's technology powered by XRP is already integrated to mitigate the systemic risk and pioneer a new era of global settlement. So he does mention SBI here. All right, so here we go. We're getting into it. SBI obviously holds a 60% holding in Ripple Labs. They're tasked with expanding RippleNet, the company's global payment network. And they also hold quite a lot of XRP. Widespread bank integration. The CEO of SBI Holdings has championed the adoption of the XRP ledger for cross-border payments with plans to integrate it across a significant portion of Japan's banking sector. So we've heard about that for many years. And then there's stablecoin distribution. In a more recent development, Ripple partnered with SBI Holdings to distribute the RLUSD. This move further embeds Ripple's compliance-first approach into the world's most regulated markets. So namely Japan. So these deep-rooted connections mean that Japanese institutional sentiment and the macro financial risk facing Japan are particularly relevant to the XRP ecosystem. So we know about the reverse carry trade. We know about, in that clip with Felix Pren, he did basically describe this. The reverse scenario, though, the reverse carry trade is the forced rapid unwinding of this strategy. It is triggered when the interest rate differential narrows significantly or more acutely if the Bank of Japan unexpectedly begins to tighten monetary policy and raise rates. So the unwind, guys, this is when the yen is expected to strengthen. Investors must sell their foreign assets and buy back the yen to repay their loans. But the global impact, guys, the mass repatriation of capital can cause a liquidity shock across global markets, pushing up yields in foreign bond markets as large buyers pull out, and then cause sudden volatility and sharp sell-offs in risk assets. It acts like a global deleveraging event or a margin call, a huge margin call on a large scale. So how can XRP assist in financial markets? Well, of course, it can be used as that bridge. It can be used as on-demand liquidity as it is intended to be used. XRP is a bridge currency, of course. Instead of pre-funding, a bank sends its domestic JPY, which it then settles and converts to XRP, then sends it across the XRP ledger in 3 to 5 seconds and instantly converts it to the target fiat currency, in this case USD, on the receiving end. So if we do in fact see this unwind, and if we do in fact see a problem arising in Japan, will XRP be utilized? Maybe the writing has been on the wall for a while. And maybe this is why Yoshitaka Kitao has been touting XRP as very important for a very, very long time. Maybe this is why he has pushed to integrate XRP into the Japanese fabric, because he is seeing that the writing is on the wall, that they do need XRP in order to bail themselves out of this potential problem. I don't know, guys. It is just a theory. I will link all these articles in the description of the video if you're interested in reading further. That's just my opinion. I'm holding XRP for the long term, guys. And if you want to hear the method to my madness, you guys can follow me at patreon.com/workingmoney channel. Again, only $5 a month, but you got to subscribe and stay subscribed to lock into that price. You guys should also check out the Working Money Channel merch store. The link is in the description of the video. This is one of my favorites here, the XRP Send It Astronaut men's t-shirt. Check it out. A great Christmas gift maybe for somebody. That's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.